Have you recently noticed New Zealand dollar has been falling against USD? And if you have traveled overseas, you might have noticed that we getting less money overseas. You need to know why? I'll tell you why, what's happening and what you can do to safeguard yourself against any these sort of stuff. So basically what's happening is US dollar is becoming stronger over the period of time, last 3-4 years. Reason being their economy is performing strongly and their interest rates attract investors. So like the way we have cut down our interest rates, they haven't. So global, they're getting a lot of investments over there and their economy and companies are doing better as well. So that way, if you see S&P 500, they break, but they have bouncing back all the time. So that's why there is a big demand there. They're doing better than us. Of course, our dollar is falling with them. Second reason is, in general, our interest rate is being lower last 2 years as we've been cutting down the OCR, which giving more money into people's pocket, which means that less investors are buying New Zealand dollar and less foreign investments are coming into New Zealand. So there's less demand overall for New Zealand dollar. So that's why it's going down. And third reason is global risk sentiment. As you know, we live in uncertainty and a lot of things happening out there. And our currency, small nation, is not a safe haven for a lot of people. That's why investors, even some governments as well, they like to hold the assets which are stronger in general, which has a stronger proposition. So that is why you see gold prices are skyrocketing and crypto skyrocketing. Well, it's coming down, but coming down from where? It was nothing 2 years ago. It shoot up quite a bit. And if it 10-20% go up or down, that doesn't matter. It's significantly up in last 2 years, gold and crypto. So this is a global sentiment where our dollar is not a global big trading partner, big thing. So that is why we have less investors attracted towards commodity prices. Of course, if our commodity do not get what we looking for, so then we get a less value on there as well. So what it means to you, all that thing, what's happening to you? What's happening to you? If you're importing some things from overseas, that's going to cost you more in general. If you're going to overseas travel, that's going to cost us more. I recently been a place and it costs us a lot of money, like small things are expensive for us. Overseas investments will fluctuate. Online shopping, mainly from US retailers, is going to be expensive for us. This is the impact on us. Impact on businesses. Of course, businesses will have a foreign currency exposure. So if you invoice $700,000 exposure, there is a big margin there. You can lose some money there all of a sudden. So that's going to happen. The imported material stock will be expensive because we're getting less value for our dollar, and exporters will benefit. The reason you see exporters is in the news lately that they're making good money, good margins. This is mainly because of the dollar. All of a sudden, someone was buying $100 worth of goods from us and they were getting 100 units. Wow, they only have to pay same amount of money, but they'll get 120 units now. So with the same amount of money, more exports is happening. So there is the reason we see more export is happening, because dollar is low. Perhaps in a bigger picture that benefits us exporters in general, because they get more money in the pocket, but importers will have to pay more. Balance of trade, what more, what less. So those things will be mattered here. Opportunities for exporters, they will get strong margins and strong gains, good opportunity for them. Attractive for overseas buyers. So if you are a person of New Zealand origin who's living overseas, it's a good time for you to invest back into this country, because you're getting a good margins from you. Australia to New Zealand or US to New Zealand, you're getting a good rates back here, and that will give you a lot of investment opportunities here. So that's what the main thing. Risk, of course, risk are there. Fuel cost, machinery, tech cost, all those things will go up. Supply chain, we have to add more pressure, margin pressure on retailers. So retailers could sell the goods for only $10. They're still selling it for $10, but their margin was Previously $2, the margin is only $1.50, but they can't put the price up because they'll lose the customer. So there's more margin pressure coming on to the retailer. What you need to know, you need to just review your pricing for import cost. You need to just plan ahead. You see what sort of exposure you have. Do you have a bigger exposure, smaller exposure? What is the risk that you have, and how you can hedge your risk? So there are hedge funds out there. You can future contracts. You can sign up contracts. So just give some certainty and some cash flow to you. A lot of companies have hedging principles, hedging documents, but again, but don't get locked up into those contracts as well. Do proper planning, take some risk too, because what happened is I was in a company and we had this hedging policy that 90% of US contracts to be hedged, and they were a big paper importer. Dollar value was 50 cents. They hedge everything for next 10 years for 53, 54, 55 cents. Our dollar value improved significantly over 60, 62 cents. And we were locked into those contracts. Imagine if you're importing millions of dollars of papers every month and what sort of exposure you had. We lost a lot of money there. So be careful when you're doing those sort of stuff. And this is just an informative video for you to know what dollar value is, what hedging principles are, and what you need to know. Thank you for watching this video. If you like this video, please subscribe and share to our channel.